Hi and welcome to the Market Alert for Thursday, the 4th of February 2020. So stock futures slippers, S&P 500 attempts to extend 3-day win streak yesterday. So let's have a look at this in a bit more detail. But before we do that, let's just have a look at the implied volatility. While I'm here, you can see that this dropped further. So the risk to the downside at the moment has been averted, given that we've seen 2 consecutive days where the implied volatility has moved to the downside and back below the 20-bar moving average as well. Still amber because the Dow hasn't closed yet above the 20-bar moving average in the daily chart. So, but you know, you can see that it's heading back to the downside, as we saw here and here and here, where we've had these minor corrections. The market then has continued to move to the upside. And let's have a look at the Dow. We'll start with this. This is the Dow. And you can see that prices retraced 62% from this high to this low, and on low volume as well, which is interesting. But at the moment, we're finding support at the 62, but still failing to close above the 20-bar moving average there at the moment. So a bit of weakness around there. But for the last 2 days, the lows have been higher than the previous day, so bullish there indicator for the Dow. Meanwhile, in the DAX, let's have a look at the daily chart here as well. Let's just drag this over and make it a bit bigger. Let's move the volume down a bit, compress that, and you can see we're above the 200 MA in the DAX, and I'm just going to move this over a bit as well. So yeah, we're above the 20-bar moving average and above the 5, and again we've got those rising lows, but the market stopping at the 89.78, which we drew in a few days ago. This is the 2 fibs from this one and this one down to this low. So an interesting area, but the market not closing above this convincingly. And again, you can see we've got a decline in volume here as well. So a bit of weakness overnight at the moment for the Dow. So looking at the 2-minute chart overnight, we can see that prices opened above the DP and the 200, but then they closed, then bounced back to the 20-bar and then moved lower. And now we've got the 200 above the 20 and the 20 above the 5. Prices finding support at the DP is what you'd expect, as you can see with the volume bars there, an increase in volume as they buy back, trying to hold this market. And it works for a time. We come back above the 200 and then we start cascading down straight through the 200 MA and the DP there, and settling at the 13,943, which I'll come to in a moment when we review the rest of the yesterday's trading. The market sideways for the remainder of overnight, early hours of the morning, but starting to bounce back a bit at the moment, heading back towards the 200 MA, the 943 and the 13,944. So the 13,943 is the confluence of these 2 fibs here, which is why I transposed it onto the chart here. Just going to compress this a bit further just so we can see how far we are away from the previous day's low, what else we've got in the way. And the same on the upside, we've got the DP, the 943, the 200 MA and a BRN to get through here to move to the upside before we can any attempt to get to the previous day's close and high. So be aware of these other areas of support and resistance depending on which way they move the market when the futures opens at 7 a.m. Okay, so that's where we are with the stock markets for today, and what is likely to happen and where prices could potentially go. So let's have a look at yesterday's trades. Okay, so the market moved higher off the 200 MA. I spoke about this in yesterday morning's alert when we looked at what we could expect for yesterday, and the market went to the high again. That was an important point that was mentioned, with prices then spiking up to the upside just before they opened, trading to the 50, and at the 50, it's 43. There was resistance at this area in the daily chart where we got the confluence of the 2 fibs. However, prices managed to drive higher. We then get selling pressure up thrust there, where you can see this bar here, the volume is far greater, the range is less, heading towards the R1, and this was to be the high for the morning, as prices then saw some selling coming into the market, and then the 943 becoming a dominant resistance for this market, which we'll see going forward. So as prices traded back to the 20 bar moving average, I drew in a couple of fibs from this low and a low over here to this high, and they were all marked up here. And again, like I say, we have this confluence of a few fibs where the market could actually find support, and that's precisely what happened. The market traded back through the BRN and then reversed, and then traded through the first set and then found support at the second, and then reversed. And immediately when this started to happen, I thought we're going to get in a bit of a sideways move here, and that's because there's major resistance at that 943 level. So we had a potential sell signal here, and the market filled it, and then watch the volume in the lower window there, and you will see that as prices went down to the two sets of fibs, which happen to be the entry point as well, you can see that we've got this increase in volume and the market's not going down. So immediately we've got a warning there, and then prices trade back to the 20 bar moving average, and it was a case of let's see what's going on. So what I did was draw in the 943 from the daily chart, because again you've got those two fib retracements, and this is why this market did what it was doing yesterday. Obviously they were aware of this as well, so I jumped out of this trade at this point. Again, you can see prices struggling with this area. They try to drive through, which is interesting. They get a 50% retracement. We have a potential buy signal which isn't filled, and then they send it back down through the 943. And again, you'll see the increase in volume. So every time it was sent through this 943, they kept buying it back, as you'll see here. So again, there's no point. If it's going to break above there in the daily chart, it's going to move to the upside. So then we have a long, which is doesn't even get out of the start gate before it's actually slammed back. So now they want the market below the 943 is what they're indicating there. And eventually it gives way to moving to the downside. But incredibly fraught sideways battle there between the buyers and sells. And that was because it was this 943 level. And then eventually prices start to move to the downside. Got to break even, and then we're stuck at this 78% retracement. And decided to take the money off the table at this point when we've got the green bar there. But should have stayed with it actually, because prices closed back above the 5 bar, but they came to the 20 bar and never closed above the 20 bar, and then drifted down to the 200 MA where they found some support. But a very choppy move to the downside it was yesterday, back below the 200, and now the 200 becomes the support, and you can see them buying back in here. We've got this testing here. Also this bar as well, where you can see the volume is 90% of the previous bar and holding as well. So the 200 MA and the previous day's close, and the BRN, and a close above the 20 bar moving average. We had some news there. It was just too much news to be overly concerned with. Like I say, I think they've just downgraded every news item because it's irrelevant, to be honest with you, and not worth taking any notice of unless it's the unemployment, non-farm payroll and CPI, to be honest. So then the market found some support initially at the BRN, and then traded sideways through the morning there. So it was a very odd morning given the volatility we had the day before, but I suppose we're going to get this where prices need to consolidate. So yes, an interesting morning, but this 943 was a major issue for the market, and going to leave that one in on the chart for the time being. Then in the afternoon, I forgot to hit the record button. Miles away, obviously. Didn't notice until after, so I'm just going to switch back to this one. and all of the moves, not the moves, but all of the detail and the important pieces were actually in the morning session. Pretty straightforward in the afternoon. We had, again, there's your 943. The market had come down to the back below the high. Then it found some support. We've got a retracement there. And eventually we managed to break back. And there's a bit of a battle going on initially for the DAX, and then it breaks to the upside up to the close, and again you've got a retracement. Now it's finding support at the 20 bar moving average. The 5 bar is above as well, managed to move prices back up to the high, and again you can see there as soon as we hit this point we've got some selling. The market then consolidates through this area here. You can see the sideways move. We had one coming back to the close there. The volume dropped off nice, and so again you can see there's the selling seems to have disappeared through this area, finding support at the close. We then had a buy signal and prices moved to the upside, and they didn't close below the 5 bar moving average until here, which was a 47 point move on this particular trade. Okay, just before I finish, let's move over to the silver market, see what's happening there. Just a quick rundown. Not a lot is the answer at the moment. We'd go back to the daily chart, and again you can see yesterday the market found some resistance at the 50% retracement and the 5 bar moving average and move lower. And overnight prices have tested the 62% retracement and also Tuesday's low there as well, where they brought the market back. So let's have a look at that in a bit more detail. In the 60-minute chart you can see that they've tested, and it's at the 200 MA for the 60-minute. So we've retested the low of Tuesday there, and they've had a bit of a shakeout to bring some support in, which is interesting. And in the 5-minute chart, well, this cluster of volume down at this level as well. So it will be interesting to see how prices move from here, whether they can stay above the previous day's low and head back towards the DP from yesterday as well. But certainly an interesting bit of price action there overnight, and the 62% retracement in the daily chart as well. It could still have a run down to the 20 bar moving average as well before it decides to move back to the upside, which has been a consistent thing with pullbacks in this market. And if not, then we go down to 78 as well, which is the 50 bar moving average, and that would be a crucial area. But there's certainly there's still a massive demand for the physical. I mean, if you could buy silver at $26, I would, or that's the physical, I would be buying it. You can't get it for love of the money, and 1 ounce coins in the UK are selling at 46 pounds per coin. So work that one out. How can you have $26 and such a massive premium difference because of obviously demand? So the futures market, the paper market, is completely disconnected from reality and what the price of silver is. So, you know, as I said yesterday, when will it go up? When they allow it to go up, and then you will see it move like you've never seen it move before. But until that day, whether it's this year, next year, 20 years, 30 years, whenever it's going to be, we'll just have to sit and wait. But like I said, if we can get above $30 per ounce, that's going to be good. But the real, what will convince me that this market is actually returned to a bull market is when it breaks $50, the all-time high from 2011 and 1979 when the Bunker Hunt brothers cornered the market. So it's just a matter of waiting to see, playing the patience game. Okay, just before I finish, I just want to acknowledge one thing. I did receive your comment, Jonathan, of yesterday, and yeah, you know, very interesting what you're actually saying here that happened a few years ago. And of course, once silver does start to move, then, or the demand for the physical or that isn't available, well, I'd expect more of this to happen as well. But for some unknown reason, YouTube won't let me reply to it, so I thought I'd just acknowledge this in the market alert, let you know that I have seen it, and very interesting indeed. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.